Alrighty. Bueno, welcome everybody. Thank you for being here. This is such an amazing panel with amazing people, so let's enjoy and see what they have to say. So guys, for the topic of today, RWAs, Bitcoin, I know all of you well, but if we can start please off with a small intro, what each one of you guys does, what your companies do, and then we get it from there.
Scott Millar, the founder of SideSwap. We've built a non-custodial swap market, so we have a non-custodial wallet where users can hold real-world assets within their wallet and swap them atomically or in coin-join transactions for either securities or other assets issued on Liquid. So we're involved in both wallet operations as well as building the swap markets, as well as assisting with issuance and whitelisting.
Amazing. Thank you, Scott.
So let's give it a try. Can you hear me?
Yeah.
Oh, perfect. Mine is working. That's great. Good morning, everyone. I'm Rahim Taghizadegan. I'm an Austrian economist and entrepreneur. And one of my projects is Deedsats. We build on Bitcoin Layer 2 protocol RGB, combine it with Master, and are interested in niche use cases of tokenization that leverage the privacy options and full decentralization that RGB offers and maintain some of the biggest advantages of using Bitcoin and building with and on Bitcoin.
Sorry, Rahim, a quick question. One of the last real Austrian economists, is that true that I read?
Yes, but it's an unfortunate fact. The Austrian School of Economics has virtually disappeared in Austria, as a lot of traditions have disappeared in Europe. And I consider myself the last Austrian economist in that tradition.
Well, I'm glad we have you in Bitcoin then.
Yeah, my name is Yat. I'm chairman, co-founder of Animoca Brands. We're probably known as one of the most prominent investors because we have over 628 portfolio companies and keep investing this year alone. Despite the choppy markets, we've done over 100 deals so far. In all tokens, in all forms of tokenizations, not just specifically Bitcoin. Most recently on RWAs, we have a joint venture in Hong Kong with Standard Chartered and Hong Kong Telecom around a Hong Kong dollar stablecoin, basically, licensed by the HKMA, or about to, let's see, it's all part of the application process. And then we also have a joint venture with Prov Labs on Nuva, which is an RWA marketplace. And happy to be here to talk about RWAs.
Amazing. Well, guys, like when I was preparing this panel, one of the things I was researching was last year, by the beginning of 24, we had $2 billion of tokenized assets. Mainly it was T-bills. As of now, it's 18 billion. So we've gone like 9x. Can we explain what is going on and how did the space go from 2 billion to 18 billion in the last 20 months?
Well, I think it's, from our perspective, very natural development. All of the, shall we say, benefits that you have with blockchain ledgers, where you have a ledger that's effectively operated by the users who control the assets as opposed to an asset operator. If you can bring these efficiencies to securities markets, there's a lot of benefits to be had, and I think the growth we've had so far is very large from a small level, but there's so much more room to grow.
Mm-hmm. I disagree. I have another perspective. I think the main reason is that Tether discovered a kind of shadow banking Eurodollar replacement. If you know the term Eurodollar, it refers to dollars created outside of the US and outside of the US jurisdictional purview. And with the high interest rate environment we had recently, that proved to be quite a cash cow. And so traditional finance, of course, over time realized that kind of cash cow, and with the positive signals with the recent US administration, there was a kind of green line trying to figure out how to get some of that cash flow into TradFi back. That's why we see a lot of money market fund tokenization, and so far stablecoin is the biggest use case of tokenization. But of course that could enhance the way for other assets to be tokenized, but that I think is the main reason.
Yeah, I mean, once you take out stablecoins to your figure to 18 billion, that still is an underreported figure. because RWA reports that, but if you look at things like what Providence Labs has with basically the HELOCs product, that alone is another $15 billion, and then you've got other platforms that aren't measured. So I would say the estimate is closer to north of 30 or $40 billion worth of RWAs. That said, it's a tiny drop in the ocean when it comes to the actual RWA market. So while it's it's a big figure in relative terms to the industry, finance industry, it's a drop in the ocean. So we shouldn't get too excited, right? But I think the bullish use case is to say that there's a lot more growth to come. And the reason why we think is the last couple of years there's been a strong institutional focus on crypto and tokenization. The other thing is reaching new audiences. So if you look at places like Korea, reason why RWAs is becoming a more hot topic before, even with the regulator, is because the youth do not buy equities, right? In Korea, I think sort of people under the age of 30, 60% almost exclusively only trade crypto. And if you look at the start of this year, in fact, Korean won trading, not as a stable coin, but as Korean won trading, actually exceeded US dollars for a moment in time in Q1, right? So just to show you sort of the range. And Korea has many macro reasons, no taxes on trading, no free flow of capital, why that happens. But the thing is that the next generation isn't buying equities, not because they don't value it per se, but it's just not their medium, right? It's just not what they're used to. And so I think RWAs becomes another access point, distribution point to the youth and to new markets that they wouldn't have otherwise known. And that's appealing, right? But it's still the onboarding, but it's also what institutions understand. They're not going to understand meme coins or even Bitcoin, I would argue. They think they would struggle with that. But they do understand that they can take their mortgage-backed securities, or that they can take some royalty product, or they can take something along the lines of those sort of things that they get and tokenize the income stream and then sell that. They get that. And I think this will be a big theme for the coming years, as I think it's very institutionally focused, at least in the near to midterm.
Yeah, that is spot on, and I would like to double down there, and we can start the other way around, which is, as you said, the economy, we're talking about quadrillions of dollars, right? And indeed, it's a drop in the ocean. So what do we need to get to something more significant? Like, what do we need to get to, like, the first $1 trillion of tokenized assets and start being, still $1 trillion is a drop in the water, talking about a quadrillion dollar or more economy, right? But what do we need to get there?
So, I mean, maybe I'll start with some thoughts. Of course, the audience has a lot of expert opinions, but my view is that in order to really grow the RWA space, we need an asset that can be really revolutionized through that, right? Like, if you think about what Bitcoin started, Bitcoin was a revolutionary asset in itself. It didn't have a peer. It had something new, and it appealed to an entirely new audience, right? It wasn't Wall Street that said, yay, Bitcoin. It was all of you guys here, right? And you created an industry that came from nothing, right? And so what are the industries that need this, I think, is probably the easier point. Institutions will sell, and they will keep growing, and they will add products to it. But if they don't get adoption, like if you're a family office, you can buy a HELOCs that isn't tokenized, right? You can buy real estate through a REIT. Like, you don't really need the token construct. It has value, but it's not why you do it. So you need to reach that new audience, right? And so I'll give you one example that we've been focusing on, which is student loans. So student loans is a $3 trillion market, and we're trying to RWA tokenize that, right? Because students need to receive, there's an infinite demand for student loans. Education is important, right? There can be efficiencies in terms of yield that you generate. Bitcoin is a perfect collateral asset for that type of stuff, right? And so there's a whole range of things you could develop, and it's a new audience that doesn't really know money. Like, think about it. Every student that receives a student loan actually doesn't know anything about money. He just gets a loan. He gets to spend it. But he doesn't actually learn about that. But if you can bring that on, you're bringing hundreds of millions of people into that infrastructure for, basically on the demand side, and then on the supply side, there's yield, there's often government backed, right? That's the other thing. There's safety as well. Institutions want to know that if I give money to something, how is it backed? And the problem with pure crypto is, even with Bitcoin, even though, we here would agree that it's a strong collateral asset, tell that to a family office. So but what is its value? I'm listening to people like Peter Schiff, I don't know, right? So you've got that type of stuff. So we feel like new asset classes are actually more exciting than, real estate, for instance, which is important, but it won't move the needle, we think.
Yeah, I agree. I mean, so far the problem with tokenization has always been demand and liquidity. The challenge in demand is that most people don't see a new feature in tokenization, but added risk and added complexity. So I totally agree it needs, because it seems like you get the risk from crypto, but not the excitement and the upside and the revolutionary kind of ideas. So it's definitely in assets that don't look traditional or give access to people that haven't had that access. And that's mainly a regulatory challenge, I'd say, because that's the reason you don't have access to the more exciting venture kind opportunities these days. And so, of course, tokenization from the beginning and the crypto from the beginning has been a lot about regulatory arbitrage, and I expect that to continue, hopefully through competition of jurisdictions. And there I'm hopeful that with going towards a more multipolar order and stronger economies outside of the Western-dominated world, we have seen that the opportunities will increase and they'll be learning from more forward-looking jurisdictions, like here in the Emirates, for example.
And sorry, Rahim, doubling down there again, do you think that now with the US, I mean, and Donald Trump like spearheading all of these like radical change, let's say, do you think that now actually countries will begin on this like regulatory race on who's got the best regulation and the best context, or still do you see like some hesitation?
For now it's positive, but it has a huge risk, of course. There can always be a blowback, and if it's all burnt through meme coin-like things, and it looks too much like enrichment of insiders, and there's a political change in the US later on, it could be a worse rollback. So, I mean, Trump has always been an ambiguous figure there, but for now, of course, the positive, shining example of one of the biggest, most important jurisdictions becoming more friendly is a good sign, and let's hope that something fundamental is built and it's not just like burned out and used for enrichment.
Yeah.
Maybe just to comment on the US, I think the big trigger that will change next year is the Clarity Act. So the market structure bill is going to set basically the framing, the legal framing as to what is a digital commodity under the CFTC versus SEC, and of course a framing on utilities. We already know that Chair Atkins already has said many things around NFTs are not securities in this framing, and utility tokens, and most tokens aren't securities. However, it's not law, it's an opinion for now, right? And so once it passes law, we expect that every company in the US, big and small, is going to start going, oh, now I can tokenize. Remember what happened when the Genius Act was approved. Then Amazon and Walmart and Facebook and Google, they all said stablecoin, right? Before, they wouldn't even dare say that word. So that means we're going to see a lot more token innovation and token development, which includes RWAs as well, because they're going to understand what framing they sit in. And you're going to see some, I think, interesting innovations that happen, which is really what they want to do, drive here. For instance, maybe it doesn't mean ownership, but maybe people are talking about basically sort of tokenizing the income stream, royalties, right? So they're a form of an asset that isn't really sort of the physical asset itself or the ownership, but a version of that they can basically sell on, for instance, right? And then think about what happened in private markets, right? A lot of the secondary marketplaces like Forge and so on, they all started getting acquired because you can see much more activity. And many of those companies, like take all those big, giant, I mean, there's giant private companies now, larger than public companies, right? That are meaningful, right? They may never want to go public. They may think in the future around, you know, maybe 5, 10 years, maybe I'll just tokenize the business as a whole, right? Because the thing about RWAs and tokens generally is market access to a broad market. If we announced our merger in the US, why? Because in the US, there's the deepest capital market, right? It's the NASDAQ, New York Stock Exchange, but it's a monopoly to the US market, right? And we're in Hong Kong, London, you could have a stock exchange there, but it's harder, or an American just won't buy the stock in London or Hong Kong. I mean, he can, nothing stops him from doing it, but they may not want to or whatever, right? And it's permissioned, effectively. Whereas if it's a token, everyone can offer it, right? Think of every token, whether Bitcoin that's out there, every exchange can offer it on a permissionless basis, right? And that's basically where the future of markets is going to go. And with that framing, if you have a way of listing your company that way, wouldn't that be better than thinking about a closed loop exchange, right? And so I think that's kind of where it's going. And then think about all the people. You're in Argentina, right? All those people who have crypto, many don't even have a bank account, right? They can now become your buyers, right? In the current framing, they can never even have access to what you're offering, right? So, how do you reach 1 billion new customers? That's how you do it.
100%. And Scott, you here, like you in SideSwap, you've got plenty of securities and so on. Like, how is it all looking for you and for the business, and what's your outlook basically?
Well, I think the market, in order to grow, it needs effectively a lot more clarity in two aspects. One is the regulatory aspect, because one of the challenges is because when you tokenize an asset, and you transfer these assets between different token holders, since securities require all the KYC and AML requirements, very few jurisdictions actually allow you to update the registry without having a notary public or someone else interposed in between the two parties to the trade. So I think it's important to figure out how you build effectively a central securities depository. And that can be done in many different jurisdictions, but where the premise of the central securities depository is that when you tokenize, that you would be able to transfer the assets in real time between those parties who have been whitelisted. You can have exchanges come in and who have a big omnibus account where their user base of those exchanges could whitelist themselves and withdraw their assets from the different exchanges, but in order to benefit from the tokenization of assets, the end user needs to be able to hold the assets. And right now, I think there's a lot missing on the jurisdictional framework in terms of how to build these forms of distributed securities depositories, if you want, where there's a unified standard. That's one aspect, but then the other aspect is, for users to be able to hold these assets themselves, they need to be comfortable holding their own keys. And right now, if you're an end user, such as our users, which are like small individuals, it's maybe fine to manage your own keys and you have your 12-word seed. But if you're a big institution, like how does it work? Because right now, I mean, it works very well with the securities markets, with the clearinghouse, where you just post margin and then you settle on a T+2 basis, and I mean that's very efficient for them. Like, to settle on a trade-by-trade basis in a tokenized swap market, is that where they want to go? Maybe not now. So, yeah, I think the market, baby steps getting there, finding use cases as well as regulatory clarity within a few areas, and build from there effectively.
I see, and I want to ask something, and again, I'll begin with you, Yat. One of the points that you were mentioning was accessibility, which I completely agree. And I'm from Argentina, guys. Even if I wanted to have top up my interactive brokers account, it's still a pain in the ass, basically. I still have capital controls. I need to, literally getting money into my broker is a mess. Whereas if I just can buy crypto and buy a stock or a tokenized asset, it's in 3 minutes, I have my investment. This is it. Still, we still see in all of these new players on the back, and there's plenty of new players tokenizing US equities and so on, that we still have these certain kind of restrictions, and well, this issuer does not allow the free transferability, and this other issuer they do, but watch out with Europe, or watch out with this, with that. When do you guys think that we will see a moment, an infrastructure, or a context where they literally you can literally do whatever you want, no restrictions, and more freedom within the assets?
So I think, so my general view on this, and we have to distinguish between utility and securities. I think the onboarding, if you think about utility tokens, and of course there's a lot of speculative ones, and we won't talk about commentary, what type of tokens, but the point is that I think of utility tokens as the training, onboarding for essentially, eventually to get into securities. I don't think we'll ever get out of the framing on securities law.
In just 16.
Right? We won't ever get into a position where KYC, AML will go away. I think that's something that will always be there, right? So we have to expect that. So that means we have to. But what is the barrier? The barrier is, first of all, understanding the asset class in and of itself, right? I think utility tokens are good training wheels. We saw this with gaming, right? For instance, in the Philippines, sure, there was a lot of speculation on Axie Infinity, but when Axie actually took off, after it sort of calmed down, suddenly millions of Filipinos who do not have a bank account but had a crypto wallet, had some tokens, suddenly started thinking about, okay, well, what else can I do with this? And then they became investors. And more importantly, they started to begin their journey of financial literacy. So when you think of Ondo, I mean, it's great, and Figure and all those guys are doing amazing jobs in RWA, but they still appeal to the same people who want to buy RWAs, right? My mom is a musician. She's not going to buy Bitcoin. Sorry, guys. It's just not what she cares about, right? But when we tokenized the Stradivarius 2 years ago, which is a rare instrument, you might not care what that is, but my mom cared about it because she's a musician, right? And she's like, oh, I understand that that's valuable. I understand that has potential. And so that's what, to me, RWA potential is. We learn about money because our children, because they trade Pokemon cards, not because they buy Bitcoin or they know about the stock market. And then through the journey of trading Pokemon cards, they learn about money. And then some people say, oh, I can make an investment, or no, I can accumulate cash. What does that mean? And then they may become good stock traders later. Who knows? My point is that they learn about money that way. Right? So I see the pathway not as how does it all mix together. We'll still do this. And ZK sort of proof identity and so on can be a way in which you can have that. On-chain KYC, AML will work in the future quite well. But we have to train them, right? We have all this financial protection because of the financial illiteracy that's out there, right? Abu Dhabi, New York, Hong Kong, they have 60, 70% financial literacy. You go to Europe, a lot less, right? You go to Africa, even lower, right? So most of the world doesn't know about money, and I think that's the journey. So to me, the utility tokens are the ones that onboard people into the space. They learn about it, and then they're ready for the next market. That's how we think about it.
Well, the biggest issue is so far a lot of tokenization has been a sham tokenization for the regulatory reasons. If you need to have a centralized ledger, then most of the advantages go away, and the only way out there is either small club-like things that get these crowdfunding exceptions and so on, or if we really manage to have an accepted digital on-chain kind of KYC token, where you don't expose all your personal information into a central honeypot, but still have a reliable process of whitelisting people that are allowed to. For now, we have a lot of walled gardens, and that, of course, limits the growth of it, and that'll remain a challenge for sure in the next few years. And that's also, I think, why we see a kind of reverse reaction. We have seen much more than getting financial assets on the digital and blockchain space. We've seen a lot of refinancialization of digital assets and more of that, because it makes it easier, it makes it more accessible to your current brokerage and be within the larger walled gardens due to regulation.
Scott?
No, I very much agree with those points. The tokenization so far, very rarely do you have actual tokens that circulate freely out in the public. The utility tokens, which many times act as like bearer assets, which is like what stable coins also do. It's very easy to get them distributed and have them traded and held by the end user. But when you look at the tokenized assets, many times it's an exchange managing the issuance. Rarely do these tokens ever leave the exchanges. So even if they are tokenized, you are effectively in a walled garden, and shall we say, the Bitcoin-based capital markets or the blockchain-based capital markets that you're looking at, which is effectively a new type of clearing structure, a new type of settlement structure, they don't really arise within that ecosystem. So I think there's still a lot of work to do in terms of building the layers so that we can have these tokens held and distributed by the public. So for now, as you said, the utility aspect of having the tokens is a very good entryway in order to get people comfortable, but then you need to have the wallets support somehow managing the KYC assets, and how do you trade them, how do you distribute them, how do you swap them peer-to-peer if you don't need account or a marketplace. So there's all of these questions. So there's lots of growth, lots of questions, lots of things to resolve. It will take years, but it's a nice journey, and I think as long as there is somewhat clarity in terms of where we want to go, it helps a lot.
Amazing. Bueno, RWA possibilities are endless, guys, but our time is not. So thank you so much for this amazing panel, and wonderful to have you here, and big applause for our speakers here. Thank you.